all can, uplift our knowledge, and even in this city where we always feel, we are not in Delhi or Mumbai, but such sort of platforms always give you that synergies to match with. So that's what we are trying. And today's event is again where I think we women really look forward to, because we women, we know how to earn, how to spend, how to save, but when it comes to how to invest, we always say, "वो husband देख लेंगे." So, but I think this is where we need to grow ourselves as being more financial independent, so that we need to know that hamari choti si savings bhi, how can we really multiply them, and we are really, really looking forward to this session. So I to introduce our honorable speakers today. So, starting with Mr. Tarun Chawla, sir, CA, with over 35 years of extensive experience in strategic planning, project financing, and mergers and acquisitions. Mr. Tarun Chawla is a seasoned chartered accountant serving as Director, Finance and Admin and CFO at Vardhman Yarns and Threads Limited. His leadership has been instrumental in spearheading the successful international ventures, optimizing business operations, and fostering growth through innovative fundraising and strategic initiatives. We are really honored to have you, sir, with us, as he'll be convening and moderating the whole event. And we have honorable speaker, Mr. Bandhul Bansal, the founder of Crewsphere. ICP Indiahub extends ICP's presence in India. As a serial entrepreneur, he co-founded FinStreet, a financial education platform in India with over 11 million users across all platforms. And he started Quadby Apparels, collaborating with 200 plus firms, including JP Morgan and ICICI Bank. Bandhul is sought-after speaker at prestigious institutions like IIT and IIMs, and advocating for blockchain technology. We are honored to have you, Bandhul, with us. Thank you so much. Coming on to Ms. Shailja Kapoor, it is so good to see a woman speaking on financial literacy and financial independence. We are really honored to have you, Shailja, because I think a woman teaching us, all the women, about this is really what we are looking forward to. So Shailja is engineer and MBA finance, boasts extensive experience in private banking and asset management, having worked with ICICI Bank, Citibank, and HDFC Asset Management Company. As a vice president at Client Associates, she passionately partners with family offices and UHNIs, guiding them towards their financial aspirations. Her dedication to clients' success fuels her drive in the wealth management domain. We welcome you, Shailja. Please be here on the stage. The next we have in the panel, Mr. Eshan Saxena. Eshan Saxena, a seasoned private banker with over a decade of experience. Since 2010, he has been a key member of Client Associates, Senior Bankers Group, managing a substantial client base across major Indian cities and offshore locations. Eshan's expertise extends to managing HNI and family office portfolios, where he excels in addressing complex wealth management scenarios, including taxation, succession planning, and alternative investments. Leveraging his extensive experience working with top wealthy families and corporate leaders in India. We welcome you, Eshan, sir, please, and we're honored to have you here. So I invite Ms. Diksha, she's chair Ludhiana Management Association's Women's Forum, to please come and honor our speakers and guests. So may I invite all our speakers and sir, please to be here and start the event through the our lamp lighting, and so then we can actually start the session with. Please, sir. And sir. With this, we announce our session open for the whole panel, our honorable speakers, and so please, I request you to basically start for the main reason we all are elected here. Thank you. The stage is all yours. Yeah.
Thank you, Swati. Thanks to LMA providing me a platform to moderate a very important discussion today. I'm sure this will provide a deep insight to the world of investing. Our objective will be to keep it as simple as possible, with the assumption that all will be a new investor or converting into a new investor, as a new investor. We have very good panel who have deep insight on the investing, on all the part of investing and the way of investing, including how to match your personal goal with the investing goal. I would start, before we start a formal discussion, I would like to ask how many of who are in the audience are actual investor already? Anybody? So good, okay, one. So we have a very good population which has not started investing. I think this is a good audience where we would like to have them from a platform. Currently they might be saving and consuming or doing a consumption expenditure. So panelists would like to have them to another platform, saving to investing, and other area is why investing. So they will cover entire subject. I'm sure you will have deep knowledge and you will go with updated knowledge on the investment. And I would also request everybody to ask any lame question on investing. We would be happy to answer. The panelists would be very happy to assist you, because we are assuming that you do not know anything about investing, and they will be giving you a deep insight what is investment and why investment and other areas of it. Second part I would like to touch before we start a formal. How many of you have an opinion that women are not good investors? How many agree that women are not great investors? So don't agree? Very good. So you are, I think, absolutely correct. If you go with two empirical study, which I know, one is by Fidelity Investment, women have yielded 0.4% higher yield than men investment. There is another study by Berkeley's University, which said the spread of investment earning by women is 1% above the men. So I am starting this discussion on a very positive note, telling you that women are great investors, and we know in India also very great investors, be it Rekha, be it Dolly Khanna. So you know many of them. If you are not knowing, you will know today these great investors who have been leading investor in India. Second part I would also touch about investing is that I was sharing with panelists that I have read about Warren Buffett, that he invests like a woman. So which is a big statement from women. So why he made this big bold statement? The reason was that women, when they invest, they are not impacted by volatility of a shares so easily. So the proness of women in investing is much higher, even if you were not thinking that they are great investors. So starting my discussion or opening this discussion on a very positive note, that you are capable of doing it. You are already a house manager. So you are a financial manager, but you were not investing. So you might be investing in terms of maybe a kitty into a gold or diamond. I think you can convert your investment also into gold and diamond as a category of instrument in different. So with these positive note, I am sure that the expert panel which we have will throw more light on that. So this also have a very positive part of that. What investment provide you a platform? It gives financial freedom, your personal goal achievement. So there are many areas where you feel empowered with the money. So I'll start with the first question to Shailja, because it's directly linked to you, that what she means by financial freedom or independence, and how to attain that.
Thank you so much. So, is it audible now? Is it audible? Hi everyone. So, this is what. So, meaning for financial freedom might be different for everybody because it's a very subjective thing, and for a lot of people it can be just earning money for your livelihood. But for me, it's not just earning for your livelihood and managing your expenses. I think it's more to do with providing a sense of satisfaction that I can be a provider for my family. I don't have to depend upon either my spouse, my parents, anybody for that matter to share my livelihood. I can be a provider for my children, for the society as a whole. It not only gives you a sense of satisfaction but a sense of identity as well, because we all like equality. So I think we talk about normal equality, gender equality, but financial equality is something which we should focus on now, because as a survey also said, there are only 33% women basically who are able to take their financial decisions on their own. And so is the today's scenario with the number of speakers as well. So I want that next time I come to LMA, it is gender equality is okay, but then it should be financial equality which we should focus on. And financial freedom basically gives me a sense of identity, respect, and if I am able to add value and impact any of the other women's or anybody as a whole, it gives a sense of very, very satisfying thing.
Thank you, Shailja. I would throw a next question to Bandhul that how to start investing when I do not know how to invest. I'm not talking about FDR, NSE. They will be aware of that. I'm talking about investing which has a multiplier function. So briefly explain about that, that part.
So if you are starting your investment journey, it has to be very simple. I'm a big advocate that you can do it yourself and you will get better results than the professionals out there. So I have a friend sitting out in the audience itself. So she started investing very early and very recently, like 6 months back. And so we used to compare our returns. So the return on my portfolio is around 18-19%, and her return was around 35%. And so I don't know I'm eligible to sit here and talk or not, right? Because it's not a function of information. So when we talk about finance, it's a function of three things. The first is the knowledge, obviously, that's an important thing. The second is capital, and the third is time. So women generally do have more time and sympathy and a unique perspective around investing and around looking at the world. Now, since she used to invest in she invested in Nykaa, I believe. She's in the audience; she can confirm it if it was Nykaa. Right, it was Nykaa. Now, she was a frequent user of Nykaa, and she believed in the technology, and she understood that this is very vital and it will grow beyond my understanding. Because as a financial analyst, all I can I can look at the balance sheets, I can look at the other things, but she knows the utility. She knows that what kind of strong word of mouth Nykaa has. And her portfolio is doing very well than mine, and I wish her all the best. And I believe this will continue to do so. So if you, answering your question straight away, if you want to start your financial journey, first of all, you just have to look at the platform, right? The platform can be Grow, Zerodha, Kite, and you can do it yourself. They are free to open. Accounts are generally free to open. If you are going into crypto, then it can be CoinDCX, CoinSwitch, or any other platform that you find reliable. Or if you are going into commodities, I would suggest go for physical gold, as you all must have already started it. So you are halfway there. Just start with equities and cryptos, and it will be easier. And once you have decoded the platforms, right, now you want to invest in equities, start with the blue chips. It can be Sensex, it can be Nifty, it can be Reliance, it can be Tata. Very simple. Or if you have expertise in any other subject, if you are a food expert, you know what food brands are growing. If you love the beauty products, you know what all beauty products or what all cosmetics brands are doing good. You know what is selling like hotcakes. If you love clothing, then you know what are the clothing brands. So use your current knowledge, the knowledge base that you have built over last 30 years or 40 years, the subject that you understand the most, invest in that. The second is invest in the blue chips. That will take care of everything. You don't need anything else. And I think that should conclude this session because I don't have anything else to say.
Thank you, Bandhul. Next question is to Eshan. Eshan, though Bandhul reached to a different platform, but from a starter point of view, if we have to guide them how to invest, so there are different instruments also. Can you throw beside a mutual fund, a route of equity? So what avenue, fixed or maybe a liquid or maybe just a basic knowledge, if you can throw how to start investing?
So first of all, hello to everyone. I may have slightly contrarian view to my dear friend Bandhul, because when you start investing, when you start thinking about investing, there are 3-4 things one should think about. One is the financial tolerance. How soon I may require this money which I'm going to invest. If the time period is very, very short, that I cannot take bet on a risky asset class. Now, there are various asset classes which can be categorized as risky. Some can be categorized as less risky, and some can be categorized as absolutely stable, safe, akin to a fixed deposit or maybe money in the bank. If my time horizon is longer, I can then start taking some exposure into those slightly riskier asset classes. Second is the emotional tolerance. I think that is one gift all women have got. And Mr. Chawla started with that note of Warren Buffett. I may just want to add to that. One thing that you do require when you're investing your money in equities, so to say, is patience. If you can sleep over your money, you will make money. There is no two ways about it. And women traditionally, including my mother, they have a habit of saving and forgetting about it. And maybe several years down the line, the skeletons will come out and you don't even realize how much money they have accumulated. So imagine if that money could grow at even a 10%, what it could have done. A 10% to put things in perspective return. 7 years, you double your money. And the risk as you go long in your investment horizon keeps on diminishing. Is as simple as that. So first, I think what we need to do when we are thinking about investment is set your objectives right. What is my objective? I have 100 rupees out of my 500 rupees, which I want to save today or invest today. How long can I invest it for? Will I be needing anything out of it? If answer is yes, segregate that part. Then it's no harm taking some advisory. When you're first-time investor, I can share enough examples. First-time investors, when they go wrong on any asset class, they never return to that asset class again. And it's applicable to every individual, whether it's a woman or a man. The reason I say that is I've been into private banking for more than 10 years, and I've been a financial advisor. The reason we exist is so that you entrepreneurs can focus your energy and time into what you enjoy doing. So that you hire professionals, they can help you manage your wealth, at least guide you in the right direction. And that becomes much more simpler and easier exercise. You start enjoying it, and over a period of time, you start learning how each asset class behaves over a period of time, be it gold, be it fixed deposit, be it equities, be it fixed income. These are the primary asset classes, and of course, crypto being the next big thing. As I can see it in the next 2 decades, I think it's going to be a very, very prominent asset class. But at least objective setting, time horizon, liquidity requirement, these are the 3 things one should, first of all, figure out, and then understand about behavior of every asset class. If you can withstand volatility, if you have long horizon, equities are the way. If you can't withstand volatility, short-term horizon, fixed deposits or fixed income kind of instruments are the way. I don't know if that made sense, but that's a long answer to this short question. There is no right or wrong way of doing it, but I think objective setting is the most important factor here.
Thank you, Shyam. I think 2 important points he has mentioned about. First, you have to figure out your objective of investing. So whether you have money to invest for a longer term, one is that, and risk-taking capacity of yours. You have to figure it out, that how this money can be. So if you know that I cannot take a risk, so you have to start with a fixed maturity, or maybe a fixed income, or maybe the debt-based working where you don't want to risk, you want a fixed return. So that guidance and horizon are very important for a rule of investing. So Shailja, my next question is to you. Everybody was saving. If I remember, my mother, they used to save in maybe a small container, or they never used to have a banking, formal banking. So from that era, the saving used to be like, as you mentioned about, we were discussing that during COVID, most of within the family, you have a lot of money coming out because they have saved that money, somehow kept as a part of their expenses saving. My question is on the saving. How inflation have a role on or impact on the saving so that everybody knows why there should be investment. So impact of saving, impact of inflation on saving, I would ask that question to you.
Sure. So saving for me is just keeping your money aside. Let's say traditionally, I think you all would relate, people, especially the females of the house used to save the money in the burni. Some time back, there was a campaign launched by HDFC also, Barni Se Azadi. Because again, in the 21st century also, in certain cities, people still save in that particular Barni, which is just, used to keep food. So money just kept aside is called a saving. But when I put that money to use, I invest that money. That means that money grow with respect to time. It is very, very important to multiply your money with time, because otherwise, as he mentioned, inflation, which is in a way our purchasing power. If the long-term inflation of India is around 6% and let's say we are keeping this money in our savings bank account, which is giving us a 3.5% interest rate, on which we also pay taxes, which means a post-tax return of around 1.5–2%. And if inflation is 6%, which means our money is degrowing by 4% every year. Our purchasing power, the things, the food items or the things we used to purchase at X amount may not be, we'll not be able to achieve those goals. Let's say we have a child education. Our college fees or our school fees used to be really small amount, what we are paying today for our kids. So your money has to multiply, outpacing the inflation. Whatever asset class we choose, we have to be mindful of the fact that it outpaces inflation so that there is a real rate of return with respect to time. If we are not generating that real 4–5% alpha basis our risk profile, we are basically moving ourselves far from our financial goals. Because let's say you can multiply your money in 5 years, but investing in a certain instrument, but if that money is put in a normal savings bank account or an FD, today FD also, if it gives you a 7% post-tax return comes out to be a 5%. Again, it is not beating inflation. So any instrument which kind of outpaces inflation should be basically choose to reach your financial goals at a desired pace.
Thank you, Shailja. Bandhul, this is for you, which is again extension of a question. How in investment we do asset allocation, because there are different way of investing, and how to create that goal of long-term wealth. So that is the question.
So, so we have different asset classes when we talk about finance. So it can be real estate, first of all, then it can be commodities such as gold, silver, or any other commodity. And then there are equities, stocks, mutual funds generally fall into that category. And then there is the new asset classes such as Bitcoin, cryptos, and or maybe some wilder ones such as sneakers these days, right? They are like a hot asset class that we need, that we can follow, right? So again, these are different asset classes. Then these are the liquid asset classes that we are talking about. That is, we can sell them if we want to, right, tomorrow. There is a liquidity period. For example, real estate is less liquid than probably equities or cryptos, right? But again, these are the liquid asset classes. Then we have primary markets where we invest in startups, we invest in creators, we invest in content, you invest in yourself, right? So you don't see the immediate return, but there is a return attached to it. So these are formally the asset classes that you can allocate your funds to. Now, the risk profile will be very different for all of these asset classes. For example, as Indians, we consider gold and the debt as the safer asset class. So that in debt, we have FDs and all the bond and everything. The real estate is also comparatively safer, but it's not growing from the last 10 years. It's in the bear phase, and now we are seeing a breakout in the real estate market, and we are seeing a lot of real estate companies going up a lot of real estate properties going up. The REITs, that is the fractionalized real estate, commercial real estate that is listing in the stock market, has also seen good returns in the past 1 year. So there might be a good bounce back for the real estate. I won't go into the technicals at why the interest rates will influence this, but real estate again can be the other asset class. Then now comes the alphas, which can generate good amount of return for you, right? So equities can be that alpha that can generate if you are going into the mid caps or the small caps, or the crypto can be that alpha. So how do you do it? If you are a typical investor, right, then a majority of your money should go into the safer asset classes. It can be mutual funds, preferably index funds, right? Blue chip securities, Reliance Tata again, that sort of things, and oppose that 4 to 5% of your money can go to the risky assets that can generate a big return alpha for your portfolio, which can be crypto. If you're going into crypto, go into Bitcoin or Ethereum, or it can be private placements as well, stocks, helping a fellow investor or something like that. There are a lot of angel networks around you. You can be part of that and can help the budding entrepreneurs coming out of it and earning a fortune for yourself. So again, this can be the. But again, as Eshan has said, you have to manage your risk profile. That how much money are you willing to lose if the odds are against you, right? So odds cannot be always on your side. But again, the risk management can be done fairly easier. If you understand all of these asset classes, just pick the top choices from there and the associated return, and then you will be able to know that, okay, how much money do I have to allocate in the each asset class, right? So
Thank you. One of the major point he said we should be aware of what type of risk. Again, repeated answer is we should be well aware of the risk in all asset class. So keeping in view of one aspect is that inflation bites the saving. So my question is to Eshan. So there are different investment class which Bandhul has mentioned. So over a long-term horizon, if I have to make them understand that they have been investing in FDR, gold, silver, equity, and why equity. So just explain them why investing and what type of different earning capability of these asset class over a period has been. If there is maybe a slide on that will help them understand, I think that will be better.
So I'll start with the very basic. So there is something called a risk-free return, which can be pegged to, let's say, a government bond. So why we call it a risk-free is it comes with a sovereign guarantee, meaning you will never lose your money. It is the highest credit quality there can be in a country, whether it's US Treasury or Government of India bond. A risk-free return will always be the safest, but will always be the lowest in terms of the return. Anybody who wants to achieve a higher return has to take some element of risk. Now, what that element of risk is will be defined, guided by, again, the two things, time horizon and your risk tolerance. So if you see this chart, right from the very basic, which is cash, you cannot lose the cash which is in your bank account. You cannot lose cash which is in your pocket. Debt funds, it's a vast asset class. It would include Government of India bonds. It would include fixed deposits. But like Shailja mentioned, there is an element of taxation, which also eats away almost a third of your return. If you're falling in the highest tax slab, 30% plus surcharge plus cess, it comes to around 34-35%. Whatever returns you have made, if you're just paying 35% to the Government of India as taxation, what will be left to you? So to make additional return over inflation, you have to take some element of risk, and you can start with, let's say, a very basic balanced fund or a hybrid fund. What it means is it's a fund which is a combination of debt and equity. So you don't take 100% equity risk, but you start taking some equity exposure and again go through a managed solution or a fund structure. Mutual funds are very, very easy to buy, invest, and there are so many mutual funds, so much data available today. You can go and pick yourself. We also talked about asset allocation briefly, so maybe I can share one or two examples. So you're going on a trip, let's say a month-long trip. You will not be carrying one pair of shoes because you do not know which apparel, which outfit, which pair of shoes will fit. And similarly, all these asset classes, they behave very, very differently year after year. We have seen a stupendous run of equities 2023. But a lot of people, they fall into that trap of chasing the best asset class of the previous year. And time and again, we have seen retail investors, people with less financial literacy, they kind of get into that FOMO trap. I'm missing out. Let me invest in equity. My friend has made money. Your friend has made money because they were invested. Correct. So having adequate allocation to each asset class makes a lot of sense. There will be years when gold will outperform equity. There will be years when fixed income will outperform equity. This year, personal view, I think fixed income can match up to equity returns because we've seen a very heavy run on equity and interest rates have already peaked out. So you would be enjoying the best FD rates in the last 3 years right now. And that is an indication of where the interest rates are. And when the interest rates are at the top, when you invest, then you get that kind of a return on fixed income. So creating a balance in that portfolio and having equity for long-term goals, 5 years plus, hybrid for 3 year plus, less than 3 year plus goals, I think fixed deposits or other debt instruments which are more tax efficient can be looked at. So that's how we go about creating an asset allocation which will be specific to you. So each one of you may be into the same industry, maybe at a similar age bracket, but will have a very, very different asset allocation. That is the important thing to note. And whenever your friend tells you or gives you a tip, my portfolio has grown by X percentage, don't fall into that trap because they may be following a very aggressive portfolio, which suits them, but may not be same for you. So you need to find that right asset allocation mix.
Eshan, a very important point he mentioned that do not look for a return of whatever may be your friend. You will meet only the person who is successful. You never meet a person who has been a failure in the market. So theoretically, so one is buyer, one is seller. So if you are making money, so somebody must have sold that product to you. So I would ask the next question to Shailja. We talk about inflation impacting or taking off our saving, but how the compounding of investment leads to a very, I would say, important wealth creation impact, which not only negate the saving, but providing them a real wealth creation in their portfolio or providing them a good amount of money in the end.
So I think there are 3 factors, which are very, very important when we invest our money. How much time we spend investing in the market, okay, that makes a difference. What is the return our money is invested at, and how much money we have deployed this at the start of the investment. Now we always get to know that the earlier we start, the better it is. So the rule of compounding says that, let's say, these are the returns for different asset classes. For example, we invested about 1 crore in any of the blue chip companies. I'm taking a large cap, okay. I had invested 1 crore and at 12% in 10 years, the money became 3.1 crores. So, it grows because the multiplier effect is such that, your money grows at the earlier you start, the better the compounding effect is. So with each asset class, you can see that how the compounding works. And even for Warren Buffett, who is considered to be one of the richest, person in the world. So he basically said that we just have to be more disciplined. Whenever we are starting our financial journey, we just have to start early. We don't have to think, because when we start earning, at the initial stage of our career, there are various aspirations in terms of buying certain things. Okay, the moment we start earning, we think, let us first fulfill all our dreams of purchasing X, Y, Z things, and then we'll start saving. So I think we should first save, and then whatever is left after saving, we should, kind of expend that particular money. It is very important to, start early and just a moment. So Warren Buffett, who is like the richest person in India, he has basically created this wealth just at the rate of 9%. Okay, but what he has done all these years was patience and disciplined investing. So the earlier you begin and the longer you stay invested will make your money over long-term period of time.
I don't know if everybody understands compounding. Does everyone understand? Let me just explain it again. So what we are talking about is how compounding multiplies your money. So let's say there is a simple interest of 15% for 5 years. So on 100, you get 15, 15, 15, 15, 15. That becomes a 75 rupees. So my end game is 175. But when you let that money into the market, what happens? 100 becomes 115 in first year. Then on 115, you apply 15%. And when you roll this for 5 years, you eventually realize that 100 had become 200. So by doing a compounding, that 25 rupee differential comes about. And we see a lot of times when we are doing financial planning for our clients, something which will be common across all of you, let's say kids' education. 15 years, let's say, is the time to that education, and that you want to send them to a very reputed B school in US. What would be the expense today? Any guesses per year? Correct. So let's say a 75,000 US dollars, 4-year graduation, dollar is 83 today. I'm not taking into account, let's say, the dollar appreciation, but let's say this was supposed to be the wealth you need after 15 years. You can imagine with just 50,000 rupee SIP today, 15 years, you can create that wealth. A lot of times, SIP, monthly SIP, growing at just 12%. And with India growing, India shining, all those things we keep hearing about, 12% is a very, very reasonable ask. It's not going anywhere. But by just doing a 50,000 rupees monthly SIP for 15 years, you can provide for your child education in a top USB school. A lot of people, they get scared by looking at those numbers. But you don't realize how compounding can actually get you to a very, very big milestone. All you got to do is start early and maintain that discipline of saving or investing every month. Yeah, absolutely. You invest anywhere. Let's say to achieve this particular goal, I have to get to a 12% return. Now, with whatever combination of asset classes, you can get to a 12%. It could be, let's say, some cryptos, some equities, some hybrid funds. You get to a 12%. You can simply invest in a large cap fund also. Blue chip company, HDFC Bank stock. That's not going anywhere. It's the largest bank in the country. All banks, market cap put together is HDFC Bank. So even you will not fail. You will still get 12% return because HDFC Bank will continue to mirror how the economy is performing. So a simple 12% return is the target. There can be n number of ways of getting that.
Very important takeaway that our basket should contain a different portfolio of risk class, which can be risk as well as a time horizon also. Again, linking to your financial goals, like he mentioned about your kids' education. If that is a goal, you have a 15-year to go. So aligning that to goal, some investment going that way, very important question. Bandhul, my question to you is that we are using these words mid cap, small cap, large cap. But from the audience which are going to invest first time, what it means, what is mid cap, what is small cap, what is large cap, so that they at least have a basic, then they will develop their knowledge to start the investing? So just general knowledge.
It's a market cap based out of things. That is, if some companies have market cap lesser than a particular value, say 1,000 crores, then they will be small caps or micro caps. If they have market cap less than 1 lakh crore rupees, then they will be, large caps, or more than that, they are blue chips, and then so on. So it's all based on their their market caps. But you don't need to focus upon these things, because again, this will make your financial journey difficult. If you are starting, and it's a very wild statement, because again, we all say that you should learn about these things. If you want to learn, if you can learn, if this is your area of interest, then good. If you don't want to learn, then also there's an easier way to go about it. We don't have to make finance look difficult. Do you know how money is printed? No, we all know how to spend it, right? But I know how money is printed because economics was my area of interest growing up, right? A lot of people ask me that, how does the blockchain work? We were discussing it just before this session. I tell the people, do you know how internet works? The answer is no. But do you use internet? Whenever we have to make something very difficult, we ask these questions, which make the subject difficult, and it looks like that it's an unreachable goal, right? So we have quoted Warren Buffett a couple of times. So it's a famous Warren Buffett bet on index investing. He propagated in 2009 that choose me the best 10 active fund managers in the world, and I'm going to bet $1 million that they will not be able to beat index fund in next 10 years. And all the active wealth managers dropped the bet in 2016 because all of them knew that they won't be able to beat the index funds. This is the power of basic investing. Now, index is very easy. We all know about Sensex and Nifty. Again, why I'm stressing on this one fact? Because I want to make it simpler. I've been to a lot of women forums. I've been to various places. I've talked to a lot of women. The only thing that they lack today is confidence. That confidence to start. Confidence that they can invest. They have the IQ. They have the knowledge. They have that empathy. They have time. Right? Why women will be able to invest better? Because a lot of women have more time than the men in our country, right? Or their time management is better. Like, that would be a better way of saying things, right? Because you will be able to juggle a lot of things. A lot of women already juggle a lot of things. Women are not good at that, right? So I totally believe that they have more time management. They have active time with them. They can manage it. Hence, they should start doing it. Don't get into the technicalities if you're starting up. If you're starting up, just take out like 5,000 rupees, 10,000 rupees, 1 lakh rupees, whatsoever you can afford to lose. And tell yourself that I will blow this up learning about all the asset classes, right? If you blow this up in next 1 year, that's your learning cost. That's okay, right? That's how I started my journey as a college student. I was back in 2015, I started my financial journey with 5,000 rupees, and I just decided, because there was no YouTube back then, right? There was YouTube, but the internet was not good, and the Geo moment was not there. So yeah. So I decided that I will blow this 5,000, and I will learn the finance the hard way, because I don't have anybody else. I blew that money in 3-4 months, but I knew that where I can invest, where I cannot invest, what is my type, what kind of assets or what kind of resources do I need to put in. So believe in that strategy also. This strategy works for a lot of people, right? So I've tried it with multiple people, and they know about it, right? So it's an easier way of building your knowledge, that have some money as a learning cost and try to invest in various things, and that can work.
I think that was what I was expecting. That answer should be keep it simple, that you need not to be expert or becoming expert before investing. So investment can start with any amount. As Bandhul mentioned, that cost of mistake is your learning. That is your MBA. So he gave example of 5,000 blowing up. This is a way you can say that I can take a risk. You want to learn, you will learn only after investing. Or some people do make a portfolio of, just to have a watch, on that to learn that. This is two way of investing: physical investing or just making a portfolio. So I think that is the correct way of dabbling in the various instrument way. One need not to be expert. Even if you are expert, if I say you become a very good expert in, say, learning about automobile sector, it will be very difficult for you to identify who will become a leader after 10 years. So fortunately in India, there was only one leader, Maruti. There was second, third was distant second, but there are many technology which is coming. So you don't know after 10 years who will be the leader. So EV is coming, so you don't know. So you need not be expert. Either what I think in initial discussion said, either you be one of the consumer of the product, you liking that product, then you align your investment to that. That is also possible. You have a peer brand that, okay, this apparel brand is doing very well. Okay, you may not have read the balance sheet also. Sometimes you invest by that, but that risk-taking capacity will be your, what do I call it, investment learning portfolio. Otherwise, you can go straightway, simple way, starter as a starter, SIP, whatever mode, mutual fund, fixed earning. So that is the way what I think they are explaining in a very simple way. So I think the objective of this panel discussion was to encourage the people that this is not a different animal. You have great knowledge. You have been managing other affairs. Even many people would be managing the businesses also. It is only that you have not taken their mind to this part of investing. So I have seen that the earlier ladies used to have currently also kitty, and most of the expenditure, most of the saving that way used to go to the consumption expenditure. Maybe best was a gold and diamond. That maybe, I'm not saying this is a bad part, that they maybe have a different objective for their family, keeping in that. But investing, what they have been trying to explain in a very simple way, how investing can also buy you these assets which currently you have been buying, but with the compounding and multiplier effect. So investing is very important. So another question, Shailja, for you on the same line is that we have been talking investing in either equity, fixed maturity. So one investment which personally I want you to answer is that sometimes saving or expenses become unmanageable if you or one of your family member have an accident or any medical emergencies. So another investment to cover that, what you suggest to the group, what should be the that instrument to cover these type of exigency as a part of investment portfolio?
How many of us have heard about term cover? Few of us. Okay. So basically, cover might be seen as an expense, but honestly, for me, it is an investment. Because we all are dependent. Let's say if there is an earning member in our family and our lifestyle cost is dependent upon the earning that they bring to us. And God forbid there is an unforeseen circumstance, especially times like COVID, times were really, really unpredictable. And we always want to be prepared for the worst case. Let's say there is an earning member in the family who kind of brings certain earnings and that adds up to your lifestyle cost. There should be a term cover. So it's a kind of insurance that just covers the policy holder, whosoever has bought that policy. And in case of an unforeseen circumstance, that money gets, the person in case of eventuality, the money gets to the nominee. For example, let's say I have taken a term cover and there is some exigency that happens. The money goes to the nominee. What happens by way of this is, and there is a very, very minuscule amount. Not much of the amount goes in taking a term cover. Now, how one should decide how much term cover is required? ideally it is said whatever is your annual take home, 20x should be the term cover. For example, let's say my take home is 10L per annum, so which means I should have a term cover for 2 crores. Now, how that maths work is, let's say if I have a 20x cover, something happens to the person, okay, that 2 crores goes to the nominee. Now, if we invest that 2 crores in the safest possible option, which traditionally is considered to be an FD, it will give a 7% return. Post-tax, it will give a 5% return, considering a highest tax bracket, okay? So 5% of 2 crores again will come back to the 10 lakh of salary. So which means there will be definitely a emotional gap that will be there in the family, a emotional void, but financially family will not suffer because of the person not being there. So I think we all should have a cover which is medical and term in our lives, because all our life we have been working hard and saving for our certain goals, whatever, short term, medium term, long term. But let's say there is a exigency in terms of a permanent exigency or a medical emergency that comes, it can erode our savings in one go. And the way medical expenses have been going up, it is very, very important to pay a certain amount and get a term and medical cover. Insurance ideally shouldn't be mixed with investments, because it just does not give a very good return post-tax. But term and medical is something which every one of us should have, especially the earning member of the family. Medical should be for the entire family. A family floater plan can be taken, so that whatever we are saving for a certain goal, let's say I want to go for a vacation, I want to take a house, I want to buy a, let's say, car. So it should not happen that any unforeseen circumstances kind of erode my savings. So cover definitely should not be taken as an expense. It should be like an investment.
Yeah, so that is very important. I can add to that what she is saying. Even if you have to buy a house, you have taken a loan, you must cover yourself in case of any eventuality. So insurance company should not very important. So insurance is also an investment, not an expense. What Shailja has emphasized very good. Eshan, I would ask you to explain or tell about the importance of having a nominee in your all investment so that all are aware and make it sure that whenever they invest, or if they are already invested or a family have invested, what is the role of nominee, appointing nominee? Thank you.
The succession planning is again a topic in itself. We can spend hours on that, and it's very, very, very important to understand. Is there a structure in place to ensure that whatever I have created, wherever I have invested, is it going to get passed on to the next generation or my family members in the smoothest possible manner? Because I would like to talk briefly about Hindu laws. And Hindu laws are slightly biased towards male members. What happens if there is no will, no nominee? Hindu Succession Act kicks in. If a male member dies without any nominee or a will, the beneficiaries will be mother, wife, children, so his mother also, and so on. There are about 22 such members. But if a female dies without any nominee or a will, mother side does not get anything. Everything goes to the husband side. So having a nominee will ensure that at least those assets get another name after you. In the bank, it's very simple. My FDs goes to my spouse or my children. In investment, at least the custodian is there. They may not be the ultimate beneficiary, but there is a custodian. The money is not lying idle without any name. Because if that happens, government has provisions for that as well. If there is no claimant to a certain investment for 6-7 years, it goes to a government account, which is almost impossible to recover if you don't have knowledge about it. So it's important to have a nominee, and it's even important nowadays. We are having these discussions collectively with all our clients to have a one simple one-pager will in place. You are a working professional. You are creating wealth. What happens if something happens to you? It all goes in vain if there is no will. And sometimes, your distribution pattern in your mind, what who should inherit my wealth can be very different. What people perceive, right? So it's important. It's very important to have a nominee. In fact, government, a lot of such bodies, whether it's MFI or SEBI, they are making it mandatory to have a nominee. So wherever you have invested, any which way, you would be getting some communication to update your nominee. But and you should do this check at least once every year, because you would have made certain new investments just to ensure there is a nominee in place, there is a custodian after you. You don't want that to go for waste.
Thank you, Shan. I think we have a very interesting discussion, and I think we can go on and go on, but I think we have a fair amount of knowledge sharing. To gain that how much you have taken into account the knowledge which has been shared, I would request the audience to ask any question to the panel member. Swati and Diksha, you would any question on anything which you have either not understood or something which you have in mind that I have this much of question before investing, that can be answered.
Hi, I think this is more for Bandhul. Now with Bitcoin halving, do you think it's the right time to enter crypto now or wait after that to see how the market goes?
So Bitcoin halving is just generally one of the stimulus that we see Bitcoin rallying after like 3 months post halving. But the another thing that is kicking up is the interest rates. The US is going to slash interest rates very soon. So it can be a good moment to enter into Bitcoin. But again, don't enter into Bitcoin because it's going to rally in next 3 months or 4 months. Enter into Bitcoin if you believe in the technology, right? And so that will be the biggest wealth creator for you. And if you have a longer time horizon, because again, Bitcoin markets are volatile and they follow generally a 4-year cycle. That is, in 4 years, we will see consolidation, bull market, bear market, and accumulation. So these 4 cycles will be there. We are surely in a bull market at this point of time. But again, there is no certainty that this will continue to do so. Though there are signals around it, as you mentioned about Bitcoin halving and interest rates. But you should have a longer horizon. If you have a horizon of more than 4 years, then Bitcoin can be one of the best assets for you. If you are looking for 3 to 6 months and you want to place your check and place your bets on the Bitcoin halving, might not be the best case.
So related to the same question, Bandhul, I would like to know, or probably more information if we talk about crypto. Bitcoin is the much sorted or the much talked about. But if we talk about crypto, what all other alternatives that we have? And that's one question. And probably my another question, which is hitting me hard since we've incepted this entire show and over a lot of video calls and everything. How do you take those sneakers or those kind of things as a investment? Because that's something which I am really keen on knowing, and this question is there since we've incepted and talked about this kind of session that we are here today.
Right.
Yeah.
So I'm no expert in the sneaker area, right? So I don't know much. But again, there's a website called StockX where you can map the particular sneakers if they are coming out, and then you have to understand the pop culture for it. For example, if Nike is dropping some sneaker with a fashion brand, for example LV tomorrow, now LV is already hyped up in your community, and since Nike is dropping that sneaker, then it can be a good investment. So on sneakers front, that is something that you need to track. And StockX is one website that I know from where I track the sneakers, that okay, these sneakers can go up or not. It's as good as start investing. The second
Is it kind of a investing in it, or purchasing and then reselling it? How does it work, the entire formulation?
So for sneakers, there are marketplaces. Generally, they are like Instagram groups or Instagram communities You can just send your sneaker photo to them that, okay, I have cooped that sneaker, where you buy it from directly from the Nike, once they are launched, or you get it from some offshore, maybe from Dubai or maybe from US, right? And then they will sell it for you, right? And they will obviously get
So
a cut.
it's basically kind of picking up the commodity and
Right.
then selling
Right.
it.
Answering
right?
your question about the crypto part, right? You were thinking, what are the next steps? But since you are starting your journey, that's my whole point. You should start with the blue chips, right?
Okay.
So Bitcoin is good for investing, and if you want to look at the upcoming projects, then Swati is building one of her project in the Web3 space, which is a Volaverse. It's a metaverse project, and then you can learn about it, right? But again, I won't recommend you to invest in a new technology that can go 10x from here, for example. So how do I would plan my Bitcoin or crypto portfolio, or any other portfolio for that matter, would be I'll start with the blue chip. For example, I'll invest, let's say, 1 lakh rupees in Bitcoin, right? In the past 1 year, Bitcoin has given 300% returns approximately. So that if we get maybe 2x return the next 1 year, then the 1 lakh will become 2 lakh rupees. Then the additional 1 lakh that you have, now you can play with that money. Now invest 5,000 in every altcoin that you see, maybe 10 of them, right? Now you have put your bet on the 10 assets, which gives you a total portfolio of 2 lakh itself. Now 1.5 lakh is in Bitcoin, and 50,000 goes to the 10 alternate altcoins. If one of them rallies 100x, then boom, you have money. Even if all of them fails, then also you have 1.5 lakhs with you. Right? So first make your money from the blue chips and then invest in all those risky components. So if you're entering into stock markets, follow the same strategy. Invest in Sensex and Nifty, make some money out of it. Now from a part of your profit goes to the risky ones. Right? Same strategy would go for in the Bitcoin segment, right? Same would go in the commodities, and same would go to the sneakers as well, right? Anything that you want to start with.
Anybody else? Yeah. So I have this question. We all women, there are many the few probably, or many, I don't know, who are actually investing or into equity or whatever things. But there are many who have not started as yet. So can you just give us step-by-step structure once I leave this space, how to basically start? I mean, it's open, yeah.
So I think once you've figured out that amount, which you can put away for, let's say, 5 years plus, start doing an SIP with as small possible, as large possible. When I say that, I mean a part of my salary which I can believe does not get credited to my account and my life does not get disturbed. That amount should become your SIP amount. And you, sir had asked about large cap, mid cap, small caps. Do diversification. Maybe invest something in large cap, something in small cap, something in mid cap, or go with a diversified fund. Start with a mutual fund, because mutual fund itself will give you enough diversification. There are about 40-50 stocks held under a mutual fund umbrella. So even if you're investing 500 rupees in a mutual fund, that further gets divided across so many so many stocks. So you're mitigating your risk on that 500 rupees as it is. So whatever amount you are happy to forego, start doing an SIP and continue that for 2-3 years. Once you see what the amount that you had invested, what it has become, the confidence level will go up eventually. And in between will come the periods of pain. Those are the times we really need to hold ourselves up. In fact, the best investor will always take opportunity. If today somebody told you there is a 20% discount on Tanishq, everybody will rush toward that store. Think of equity investing like that. If the markets are dropping, if the equities are falling, that is the time you want to just increase the pace of your investment. In a market where there is a lot of uncertainty, I do not know which way is headed, just continue with your SIP. But during that period of pain, agreed, you have invested some money, right now it is in red, but that is the time to capitalize. So if you can't do that, but at least don't damage the portfolio by redeeming it. We always advise our clients, if you can't buy during downturns, don't redeem during downturns. That is a permanent damage you are going to do to your portfolio. So start with an SIP.
Thank you. And Bandhul, I want to know if I today go home, what sort of app should I download? How can I start with small investment? You said, start with 5,000. How is that way I can start with that 5,000?
So the apps would be different for different asset classes. For example, in my personal opinion, and these are no endorsements, so don't take it like one. So in my personal opinion, if you want to start with mutual funds or stocks, that is you want to buy and hold, then Grow is the best app. It has the most friendly user interface, and it will be very easy for you to learn. So Grow is the app, GROW. So for stocks and mutual funds, Grow. If you want to get into trading and you want to do intraday, you want to do futures, options, then Kite by Zerodha can be a very good platform. Again, you can invest in stocks and mutual funds as well. But again, specifically for the futures and options and intraday trading, there's no app like Kite by Zerodha. And there's another app called Small Case. If you want to invest in a theme that is in your mind and you want to invest in Small Case, you can link it with Zerodha app, and that it will serve the purpose, right? For crypto, it can be CoinDCX in India. They are doing pretty good. So CoinDCX can be another platform where you can invest, or CoinSwitch can be another platform that you can opt out for crypto. For any other assets, we don't have the formal marketplaces. For example, I was following some guy, he used to invest in coins, right? The exotic coins. And then he runs his page on Instagram, and people are making very good money out of it. And I just told him that, can you teach me this, and can you help me understand about the coin market? He said, do you have passion for it? I said, no, I have passion for money. He said, then you won't be able to learn it. So if you have particular passion that can act as a financial instrument, it can be stamps, it can be coins, it can be sneakers, it can be some kind of a jewelry, then there are particular Insta pages or Instagram influencers that can help you out with those things. So yeah, that's all.
Thanks, Bandhul. Anyone else who wants to ask or have any question in mind?
So I'll repeat the question for everybody. She wanted more information on the things that I just spoke about. So the app is called Small Case, and you will link this app with your Zerodha account, and there are like multiple themes in it. For example, cosmetics can be one of the themes, and you will find that obviously in this. Or dividend yield can be another theme. So what will happen is you will invest in that theme, and the money will go to subsequent stocks that will give you good dividend, right? The stocks will be in your name, and they will be invested in your name, in your application of Kite. But the small case, they will get some cut out of it. Obviously, they have some subscription fee. Most of them have subscription fee of 500 to 2,000 rupees, which is very nominal in my personal opinion. And you can choose a theme. For example, if you are doing retirement planning for, maybe we have younger ladies in the audience, but if you are doing retirement planning for your parents, then you can look forward to the dividend theme. That, okay, they should get particular dividend every 3 months, every 6 months, every year, right? Then dividend investing can be your thing. Or there are particular themes. For example, if some of you believe in the EV segment, that is the electric vehicle or something will grow, right? You can go to Small Case and select electric, and there will be multiple themes. Or if you think the Gen Z will have more consumeristic approach toward things, if your kids or if your friends' kids have that consumeristic approach, then there can be consumers Small Case, right? And they will have certain kind of stocks in it. You just subscribe to it, and you can buy as much as you want, and then those stocks will reflect in your portfolio on Kite.
Basically, you mean that these themes are like, if you invest in the theme, they will decide which stock it is going on with.
Right. But yes, again, you have to be very very selective and very smart while choosing that theme. Just see their rating, see their past performance, and you will see this on the application itself. It's very easy to do, very intuitive. Or even if you don't want to invest, you can just play with it. It's a good thing to do.
I would like to add something. So we all are noting the names of certain apps, but I feel that for the people who know and have time and bandwidth to do this research, it's good to invest directly, because investing directly is the best thing and which will make return for you in long term. But the base is you should have that much bandwidth and knowledge in that particular subject area. Otherwise, as we mentioned before, let's say if you are investing in something that you do not have full research or knowledge of, it can lead to a depletion of your capital as well. That's when your confidence will kind of shake and you will never invest again. So I think one takeaway or one step to begin investing is try and find out a trusted financial advisor. We kind of delegate many things which we cannot do. Even if we can do, we would like to delegate. Maybe our house help as well. It's not that we cannot do that work, but we would not mind paying him or her something and delegate that particular task. So anything which you are not sure of or you think you do not have sufficient knowledge, I think it's better to delegate that task, pay certain amount to the financial advisor who kind of spends their entire day in, day out in that particular subject, and he can make return for you. That is very important, to have a sounding board for you who can make your money grow faster.
REITs, yeah. So real estate investment trust, right? That's the full form. So you get fractionalized real estate in these REITs. So there are 4 listed REITs in India: Brookfield, then there is Nexus Mutual, and then Mindspace, and this. So I have a positive outlook towards REIT, but again, it's not an endorsement. My outlook can change tomorrow, right? But as of now, I am invested in them, and I have a positive outlook towards them, because again, I invested in them because I was doing retirement planning for my parents very recently. They were retiring, so I planned a portfolio for them where they can get a good dividend yield. And the dividend yield in REITs is around 6%. To make it simplified, what REITs does is they invest in properties, and whatsoever rent they get, they distribute 90% of that rent back to the owners of that REIT, right? So it's like investing in real estate via, it's controlled by SEBI. So what you can do is, if you are going into REITs is a very new category in itself, in India specifically. They were, I guess, approved in 2016. First REITs came out in 2019, if I'm not wrong about the dates. So what you can do in the REITs category is invest in all 4 REITs, or at least invest in all 3 of the commercial REITs that we have, right? So it can be a good strategy. You will get rent that is 6% in your account, right? And you can invest it via Kite or Grow, as I've already told you. And the capital appreciation would be there. For example, in case of Mindspace, I believe Mindspace grew, like 10%. In last 1 year, Brookfield grew about like 8%, and Embassy REITs grew 25-30% in last 1 year, along with the 6% returns which they will give you quarterly, right? So quarterly you will get 1.5% of your capital every quarter in your bank. So yeah, it's a good investment instrument, and we will see a lot of REITs coming up in the future. And SEBI is also very pro REITs, and they are promoting REITs left, right, and center, because it's good for India's infrastructure as well. Because we will see a lot of capital infrastructure. And now the thing is, real estate is getting costlier day by day. For example, if you take the case of Bangalore or Mumbai, the real estate prices are insane. And even the high net individuals, the individuals who are earning like 2 crore salary every year, are not able to afford houses in these cities. But when they want to take exposure in this, in the real estate market, they will opt out for the REITs. Hence, REITs can be something that can grow very well. That's my hypothesis, but again, it can change tomorrow. So always do your research, because that's the best thing to do. Anything else that I can, any cross question or anything else that yes, please.
If we talk about shares, is it something that we can passively manage? Because what I've heard is that you really need to be on your toes, and you need to be looking at the market at very very actively. So if this is something you want to just park your money at, is that like a good option, or like?
If you're invested in good companies and you have a long-term horizon, then no, you don't need to actively manage your portfolio. Even I don't balance my portfolio like for 3-4 months eventually, right? I just look at my portfolio from the weekly because I have a lot of businesses to run. I'm an entrepreneur myself and I like to be called one, right? I'm not an active investor. I don't manage my portfolio actively. I help entrepreneurs. That's my job and I love to do that job. So uh, you don't have to manage your portfolio actively always if you are invested in good companies. So always select a bottom line. For example, my bottom line is my whole portfolio is inclined toward the interest rate that US is going to slash in few months. Right, I've designed my portfolio according to that. If tomorrow US starts increasing their portfolio, the interest rates, then only I will change my investment strategy. Then only I'll look at my portfolio. Otherwise, I won't look at it. Right? That's the one part of the thing. Then that you don't have to invest. Or otherwise, is just invest in the index. If India is growing, then the index will grow, and you don't have to look otherwise. Right? So as Eshan said, just start a good SIP in the index, and you'll be good to go. You don't need to look at anything else.
Yeah, just adding that actively looking into portfolio is what we call it people who want to trade on daily basis. If you're personally, I'd say I never looked into my portfolio of mutual fund before 6 months. So I update NAVs of after 6 months only. This is a way. So again, what initially everybody said, what is your goal, horizon, long term? So which portfolio you want to have a trading? So that is a separate risk asset. So that is very important. So how you want to invest it, and all the classes which have high risk, we require an in-depth study. I would suggest do not, as a starter, go into that field. It is full of mines. So as cautious that once you invested and you get burned, normally either you don't enter into the market or you don't enter into that particular asset. So that is a way. It is not always that equity market goes up only. It oscillates. So if you exit at a bottom, so you might have lost it. Or if you have bought at that bottom, so it is identifying. If you are not able to identify, leave it on expert, have an advisor. So you can start with that activity. This is a way. If you don't have a time, so like if your job is that, or if your working is that, so you cannot even invest or sell or redeem unless until you have that. And do not go by investment by tips. So now SEBI is very tough on that. So otherwise you might be having a lot of I think reels coming or Facebook that this. And recently I've seen SEBI has come down on 4 people. When they actually saw their portfolio, they have lost money rather than telling what that they have returned. So be cautious on these. This is I would say, more of a discipline. You have to be disciplined, as repeatedly pointed out, and you must have first investment goal defined, well defined, what you want to do it. Thank you.
I think the best way of investing in shares is, for first-time investors, best way of investing in shares is mutual funds. Understand, mutual funds are also investing in shares on your behalf, but there is a fund manager. There is an expert in between who is taking those decisions on your behalf. So you invest through a mutual fund, and if, let's say, your keenness is on buying a share, then buy a few such shares, because you then diversify. You don't put everything into one basket. Buy a few other shares as well, just to diversify the entire portfolio.
What is your take on PPF? Do you consider it as an investment, or we have been talking about all bitcoins, everything, but I've been hearing a lot about PPF. So what is your take on that?
So it's a beautiful asset class. It does 2 things to you. One, it saves some money, gives you interest while you're working. Second, it gives you tax deduction under Section 80C. So every year you can save taxes on about 1.5 lakhs by doing either an EPF or a PPF or maybe an ELSS mutual fund investment. So whoever is salaried must continue with EPFs, Employee Provident Fund. You should continue contributing because that is the part of your salary which never hits your account. So you never feel or you never miss it. But by the time you retire, it has accumulated into a very, very substantial amount, which is kind of fixed income, guaranteed 7%. Nothing in this world gives you 7% guaranteed return, but a PPF or an EPF.
And
But
tax-free also.
Tax-free also, and only till you're working now because the tax rules have changed. So once you've retired, you can continue in the block of 5 years, but again, those interests earned post your retirement will be taxable. So it's a beautiful asset class.
Thank you so much, our honorable speakers and the lovely audience, for making it so interactive, and thank you for putting in so much of insights. As Eshan mentioned, the risk, how do you basically decide how much to invest? And then, Shailja, you just, brought the light on how to decide upon the percentage, keeping in mind the inflation and how to decide even about the term, when so many new things to learn. And Bandhul, thank you for making it so easy for every woman in the, sitting right here, that every woman can start investing right now, probably, right? So we had a mixed bag of both the things. If you have time, start it yourself. If you do not have time, you're running your other things as well. So there are financial advisors you can look up to. So I think this whole actually gave the full, this whole thing. And I would request Deeksha, ma'am, please be on stage for the vote of thanks. And
Thank you to our worthy speakers for pulling out, your precious time. I know you've been traveled, Eshan and Shailja has come all the way from Delhi, and Bandhul has pulled out his time so meticulously that, and so is Sir, all of us have, even the audiences for that matter, that we pulled out a lot of time from our busy schedules and here for our understanding and knowledge. And I think nothing could have been better. I mean, we've had enough of knowledge today to, again, as Swati has mentioned, that if you have time and if you want to do something on your own, it anyways gives us all that kind of a confidence that, oh, I did, that 1 lakh से मैंने वो 1,10,000 कैसे बनाया, and women especially, that feeling of having multiplying your funds is like kind of a very beautiful feeling. And if you don't have time, if you have 10 other things to do, and if you're not confident enough to manage your funds, the advisors are anyways there. So thank you, all of you, and thank you, sir, for pulling out your time. And thank you, the audiences. Thanks to you, those who have pulled out your time and here for your own growth and knowledge. And we look forward to have you often in our future events as well. And as I close, I think I was just reading this quote. Money is only a tool. It will take you wherever you wish, but it will not replace you as the driver. So you have to decide if you want somebody else to drive your car or you want to drive your own car yourself. So that's how we close this event, and thank you, all of you. And we have small tokens for all of you, please. Huh? Also, the dinner is served, so you please don't leave without having your plate. Thank you.
If anybody has any personal questions or probably you want to discuss something, the speaker